Hello, ladies and gentlemen. Good morning to you all, and so glad to be with you here this morning. And I hope you are pumped up to in anticipation of the New York session this morning. I would like us to quickly do some confirmations here. That is, if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get this started. So I would like to see some feedback, please. If you can see my screen and you can hear my voice clearly, type in hi in the comment section so that we can get this started. Okay, let's see what we have here in the comment section. All right. Okay, Bass 622. Thank you. Thank you. Hey, Vivi, how are you doing this morning? Thank you very much. Carrie, good morning to you, Carrie. Thank you. Another profit day. Good morning. Thank you very much. Glad to have you around this morning. I didn't see you around yesterday. Trust you're doing well. Okay. I also have WAC 2307. Good morning to you too as well. So I will be taking this as a positive confirmation that we are good to go this morning. So let's get to it. I'm excited to welcome you to yet another promising session on the Extreme Speed Live. My name is Sheriff Daramola, and as usual, I will be your host for the next 1 hour, where we shall be evaluating the financial markets using technical parameters to identify trading opportunities lining up for us today. Well, for those who are joining us for the first time, you are welcome on board. I'm glad to have you around with us during this live session, and we always do this on a daily basis in anticipation of the New York session. So stay tuned in 10 a.m. UTC as we gather here on a daily basis to review all the pairs we have been monitoring since the beginning of the week, look at how well they are doing, anticipate the New York session by positioning ourselves in such a way that we can catch any trading opportunity lining up for us today. And welcome once again, guys. Initially it might look a little bit complicated. I would advise that you continue to stay tuned in, continue to watch, be with us on a daily basis, and I assure you with time you get to understand how this works, and you will be able to make independent decisions when you're about to open your position using the informations you get from this session. So once again, you are welcome on board, and let's get started. Well, the first thing we normally do is to look at the economic calendar, and from the look of things and based on the current pair we have been monitoring since the beginning of the week, there are no macroeconomic events to look forward to. So we shall be relying on our technical skills, understanding the psychology of the current price movement to decipher what our next line of action will be. Then we should also take into consideration that we have the almighty non-farm payroll coming up tomorrow, which is always an event everyone in the market is looking forward to. And definitely we shall be seeing some reflections on the chart reflecting the anticipation of this event. It could be coming in consolidation phases across the major US pairs. So we shall be looking at that and how to be able to take a position against the New York session today. Then also yesterday I told you about the Fed chairman's certification. It actually continued, and the atmosphere in the here still remains unchanged, as the possibility of a 50 basis point rate hike is still very, very on the table. Then we also had the ADP employment change came in yesterday with a whopping 242,000, coming in with a positive variance of 0.67. So we had a beyond expectation data yesterday, which we expect that price action for the US dollar will increase in traction, but the opposite is what's happening right now, as people have been selling the dollars in the last 24 hours. And I think the reason why that is as a result of profit taking activities. Remember, a couple of days ago we had the dollar skyrocketing to the upside, and those who are taking advantage of this opportunity will definitely want to be doing some profit taking activity in anticipation of the NFP, and this has resulted in the sell momentum we have been witnessing on the on the USD pairs so far. So let's get into the chart right now and let's see what is going on in the market right now. So as usual, the first commodity we are going to be looking at this morning is the US oil. And looking at the current structure here, what was our expectation during the live session yesterday? Well, the first thing I would like us to do here is to take a quick review of how the week has went by for us on this in this community and how well have we been taking advantage of the trading opportunities. Now, if you look at the current 1 hour time frame, which is on your screen right now, you will see that initially at the beginning of the week, we had this channel identified between the $79.40 area and the $79 area. And it was from this platform that we were looking out for trading opportunity. Though we had some selling momentum coming initially after price action broke down that support line here at the $79 level, we were part of that sell position, moved our stop loss accordingly to secure that position, but we were taken out of that position at a worst case scenario of a break even. Now we anticipated further with our buy stop order sitting above the $79.40 level. We had a buy position triggered. That was on Monday during the New York session. We had another position triggered at the breakout of the $80 level. So we had about 2 positions running on that day, and we were able to scoop about, let's see, we had the first position run about 140 and the second position running with about 90 pips. So we were able to scoop roughly above 100 pips after price action took us out at the post level where we secured our position. Then on Tuesday morning, during the live session, we identified this beautiful channel here where price action ranged between the $81 level and the $80.40 area. And during the live session on Tuesday, we agreed that we shall be using both the bullish trend line here and the flat channel that we identified there as a yardstick for trading activity. And what this simply means is that if price action continues to trade above that bullish trend line, we shall feel comfortable in the buy position. However, if the bullish trend line gets breached, that is, price breaks down that structure, then definitely we want to be anticipating a selling opportunity at the breakdown of the $80 level. And this was exactly what happened on Tuesday during the New York session. We saw the breakdown of structure, retest, and in fact, price action triggered our sell stop order right below the $80 level as we rode the move all the way down into the $77.50 level to give us about 250 pips in profit. Then we also added another position right below the breakdown of the $79 area, which was identified on Tuesday too as a potential trading opportunity, and that one also gave us about 140 pips thereabout. So on the US oil so far prior to yesterday's live session, we were on profit on the US oil. Now, during the live session yesterday, we identified the structure here between the $77.80 level, which you can see here after price got into the $77.20, we started seeing some level of consolidation phase in this market. And we acknowledge the fact that the situation here could either transition into a trend continuation pattern or a reversal pattern. And we were able to position ourselves in such a way that we can catch any trading opportunity here at the breakout of the structure. So a breakout of the resistance level would have triggered a buy position for us, and a breakdown of the support line here will be triggering a sell position. And the latter is what happened here. As you can see, immediately after the live session, a couple of hours into the New York session yesterday, we finally saw the breakdown of that support line at the $77.20 area to trigger another sell position in this market. Now look at what has been happening here in the last 24 hours since the breakdown of that structure. Price action had moved about 97 pips stroke 100 pips thereabout before price action is back into the $76.68 level, with about 50 pips running in profit at this particular point in time. And for those who are taking advantage of this opportunity at the breakdown of the $77.20 level, kudos to you for being on standby to catch that move. Now, as we head into the New York session today, what is going to be our plans? What are our expectations? Are we going to continue looking out for selling opportunities here, or are we going to be anticipating a bullish momentum from this current market structure? Now, with the situation of things that we have right here, we need to take a technical dissection of the current market structure in order to decide if we are really going to be buying or selling the US oil for today. And if you look at the current structure here on the 1 hour time frame, you would observe that in the last 24 hours, I think, is it 24 hours? Okay, the last 18 hours, price action has been consolidating. And we have a situation here where price has been trading between the $76.80 level and the $76.50 area to further emphasize the indecision in this market. And with the situation we have here, definitely we want to be seeing a breakout of the structure to anticipate a trading opportunity in this market. I think my network just went out now, so I will try to do some. Hold on a second, please. Sorry for the breaking transmission, please. I had a reception issue, so I had to sort things out. If you can see my screen, please. I'll need some confirmation that we are good to go, please. So if you can see my screen. And you can hear my voice clearly, type in hi in the comment section. Okay, thank you very much. All right, before the break-in transmission, we were trying to understand what is actually going on the 1 hour time frame. And what is observed here in the last 24 hours is that price action has been consolidating between the $76.80 and the $76.10 area. And in fact, with this kind of situation here, it appears that we are having some buy pressure around this area, and because of this, I was able to identify a temporary demand zone, which is currently sitting at around the $76.40 level. Hold on a second, please. I'm trying. All right. So with the demand structure sitting around the $76.30 level, we might likely be seeing a bullish momentum coming here. And if we take into consideration what has been happening here since the beginning of the week, remember we have this bearish trend line which price action has been respecting so far since the beginning of the week. And like I said yesterday, we shall continue to use this trend line as a yardstick for trading activity. Now, with the situation of things now, we can see that as soon as price gets into the $76.40 level, we begin to see negation of any selling pressure around this area. So at every point in time when sellers get into this level, we can see how buyers continue to negate all bearish momentum. Now, with the situation of things now, looking at what has been happening here in the last couple of hours, you will see that price action appears to have broken out of that bearish trend line, which is giving us a clue that we might likely see a momentum shift anytime soon. And as a result of this, we want to position ourselves in such a way that we can catch that opportunity when it finally happens. Now, a breakout of the bearish trend line definitely will be a beautiful signal to join a bullish momentum from this point. But one thing about this current structure is the fact that we will need a confirmation to happen before we join that rally to the upside. So besides the breakout of the bearish trend line, we need a further confirmation, and that is why we have a structure here at the $76.80 level. And as you can see here, in the last 12 hours or 18 hours or so, we have been seeing selling pressure rejecting the $76.80 level, making this area a resistant point in the last 10, 12, 16 hours now. So going forward, since we already have a breakout of the trend line, I want to see price action do a breakout of the $76.80 level, buy pressure above the structure on our lower time frame to give us a buy position in this market. And if a further breakout of the $77.20 area happens, we shall be seeing this as another opportunity to add more position to our existing trade. So as for today, as we head into the New York session today, things are looking very bullish at this point. And for those who are already in the sell position here that we took advantage of right here and here, kindly move your stop loss to your entry point at the $77.20 area as we continue to monitor price action. So like I said, now a breakout retest of the $76.80 level will definitely be welcoming a buy position in this market, and a further breakout of the $77.20 will be welcoming additional position. Then remember, we have the $77.50 level here, where if a breakout of that structure happens too as well, we shall be getting ready to buy at the site of bullish pressure above the $77.50. So this is what we are going to be looking out for on the US oil for today. Things are looking very, very bullish here. Despite the bearish trend line being respected, negation of selling attempt at the $76.40 area is a beautiful sign to get ready for a bullish momentum. Now, what happens if the contrary happens here? Well, for any selling activities in this market, we want to see an outright breakdown of the $76.40 area here to give us an opportunity to sell. So if we are going to be selling the US oil, or if structure is telling us to sell, we are not going to be selling unless we cite a breakdown of that temporary demand zone, that is price action takes out all the buy positions here. Then we are not joining right away, as we need some further confirmations to happen, which will likely come in the form of a retest of structure, which possibly could share a confluence with that bearish trend line, after which the site of selling pressure on our lower time frame will give us an opportunity to sell, and a further breakdown of the $76 area will definitely welcome additional position on the US oil for today. So let's bear this in mind as we continue to monitor price action here. So we are looking forward to buying opportunity above the $76.60, $76.80 area, and we are looking for selling opportunities if a breakdown of that demand zone, retest of structure for further confirmations on our lower time frame before joining that decline to the downside. So this is what we are looking forward to on the US oil. If you have questions, feel free to drop your inquiries in the comment section. So in the absence of no questions, I would assume that we're on the same page here. So I will be moving on to the next pair. So the next option we shall be looking at this morning is the US tech. And in fact, in the last 24 hours, the US tech has been very, very choppy. And we saw some volatility. I think after the ADP employment change yesterday, we saw some volatility in the market, which shook out a lot of people in this market. And with the current situation here, and looking at what has been happening since the beginning of the week, a bearish momentum is still very, very possible in this market. So let's quickly run through how the week started for us on the US tech here. So at the beginning of the week, we identified this channel between the 12,350, which was our initial resistance point for this week, and the 12,260 level, which was the support line for this week. Now the week started on a bullish note here after we cited the breakout of the 12,350 level, which gave us that buy opportunity. And in fact, price action moved about 120 pips in our direction before this bearish momentum started. And during the live session on Tuesday morning, we identified a reversal pattern on the structure. So if I zoom out a little further and taking into consideration the previous impulse leg that started last week, that is this bullish move to the upside, we identified a head and shoulder pattern. So we have the left shoulder here, we have the head, and then we have the right shoulder here. Then the neckline of that reversal pattern coincidentally shares the same line with the bullish trend line that we identified at the beginning of the week. As you can see, since the beginning of the week, we had this bullish momentum. So when we connected a series of higher lows, we had this beautiful neckline to supports this reversal pattern we just identified here. And you all know, for a reversal pattern like this to be confirmed, we need price action to break down the neckline area for a buy sell position. And in order to position ourselves in such a way that we can catch that opportunity, we had this $12,315 level identified with a sell stop order sitting below that structure. And in fact, on Tuesday's trading session, we had this bearish momentum that took price into the 12,130 level with about 190 pips in profit. So in the last 48 hours here, we have been bearish. But one interesting thing about this current structure is that as soon as price got into that $12,130 level, look at what we found here. We begin to see buy pressure resume around that area, negating all our attempt by the sellers to break down that structure. And with this kind of situation here, it is very, very important that we take into consideration the possibility that buyers could actually come in. And because of the situation here, we need to be very, very careful, hold on and wait for significant signal before we can join the decline to the downside. Now, before I go into the details of what our expectations are right now, and for the sake of those who are not part of the live session on Monday, Tuesday, and Wednesday, I would want us to scale up into the daily time frame so that we can have an holistic perspective of what is really going on in this market, so that we can all be on the same page here and at the same time be able to align the structures on the daily time frame with what we have on the 1 hour time frame. Now, what we are going to do right now is to scale up into the daily time frame, and to do that, let's scale up into the daily time frame to see what is really going on here. So this is the daily time frame. And for those who have been part of the live session since the beginning of the week, you would remember that we have identified the fact that the current structure in this market is very bearish. And if we look at what has been happening on this chart since last year, you will see our price action has been finding lower highs. And when we connect the series of lower highs here, we have this beautiful bearish trend line figured out at this point. Now, things got more interesting when during the months of June/July, as we can see how the $11,000 area negated all attempt by the sellers to continue to the downside. And as a result of this, we saw accumulation of buy pressure around the $11,000 area, which lasted about 6 months before we finally saw the breakout of that 11,000 during the first day of this year. And since then, price action had continued to find higher highs, higher lows, leading to the breakout of the bearish trend line, to emphasize that the trend line is no longer strong enough to hold that bearish momentum. Now, we saw a situation where price climbed back into the 12,900 level. Since it got to the 12,900, what did we see? We saw a beautiful reversal pattern in the form of a double top structure. And this is what we saw here. We saw a beautiful reversal pattern. And for this reversal pattern to mature, we need to identify a neckline where price action must be able to break down and retest that structure to give us a confirmation of a sell-off in this market. And this was exactly what happened a couple of weeks ago, as we saw price action break down both the bullish trend line, which has been supporting this bullish momentum since the beginning of the year, and the neckline area of that reversal pattern at the $12,300 level to bring price to the downside. And you all know that from a technical standpoint, whenever we have a retest of structure, there is always this tendency that price action will come back to do a retest of that structure to incite another wave of bearish momentum. And since the beginning of this week we are in right now, we can see that since price tested the $12,300 level, that was last week, we saw that selling pressure resumed again around that area, giving us a clue that the neckline appeared to have been respected. And since on Tuesday, we have been enjoying this bearish momentum, so we were lucky enough to take advantage of this move as price action rode all the way down into the 12,130. And look at what we have been seeing here since the beginning of the week. The $12,130 level has been a buying niche for participants in this market throughout this week. Now, there are two things we want to be looking out for as we scale back down to the 1 hour time frame. So before we do that, we want to quickly have an holistic view here of what is really going on in this market. So with the continued buy pressure around the 12,130, we might likely see a situation where a trend continuation to the upside will happen, breaking out of the 12,130 to the upside. That is one possibility. We are going to take that into consideration as well when we scale down to the 1 hour time frame. Then the other possible thing that could happen is that price action could break down that 12,130 to incite another wave of bearish momentum to the downside. So now with the information we have gathered here on the 1 hour time frame, let's scale back down to, on the daily time frame. We want to scale back down to the 1 hour time frame to position ourselves ahead of the New York session. Now going back into the 1 hour time frame, what are we going to be using to guide our trading activity for this week? Well, based on this current structure, our perspective from yesterday has not yet changed, as we already identified this bearish trend line after connecting the series of lower highs here to emphasize the strength of the sellers so far this week. And as long as price remain below that bearish trend line, definitely we want to be looking forward to selling opportunity. But what do we want to see on this current market structure to confirm that we want to be selling the US tech? Well, if you look at the structure and taking into consideration the continued buy pressure that we have been witnessing around the 112,130, definitely we want to be seeing price action break down that 12,130 to give us a beautiful bearish signal so that we can be confident enough to join a sell position here. So if a breakdown of this structure happened, this is a beautiful bearish signal. So if that happened, we scale down to our lower time frame. It could be your 5 minutes, your 10-minute time frame. Look out for a retest of the structure to give us that leverage to join that decline to the downside. And if price action goes on to further break down the 12,000 level, then definitely we want to be adding more position to our existing trade. So this is the only way we could be thinking of selling the US tech for today. We want to see price action take out the buy position at around the 12,130 for us to have a bearish bias on the US tech for today. Now, the other scenario here is that if the buy pressure here continues, that is, if the bullish pressure here gets stronger, then a breakout of that bearish trend line will definitely be a beautiful signal that we want to be going bullish as a momentum shift is gradually coming in. Now, if a breakout of the bearish trend line happens, we don't want to join outrightly, as we need further confirmations to happen before joining. And when the breakout of the trend line happens, we want to scale down to our lower time frame. Look out for a retest of the trend line, probably buying pressure above that structure, after which we want to be joining the rally to the upside. And if a further breakout of the $12,200 level happens, we want to be adding more position to our existing trade. So this is what we are going to be looking forward to on the US tech for today. So let's be on standby to catch that opportunity when it happens. So what I'm simply saying here is that below the 12,130 is where we shall be looking out for selling opportunity, and a breakout of the trend line will be giving us a signal of a possible momentum shift anytime soon. So let's be on standby for that one. If you have questions, feel free to drop your inquiries in the comment section. So in the absence of no questions, I want to assume you're on the same page there, so I will be moving on to the next pair. So the next pair we shall be looking at is the GBPUSD. And on the GBPUSD, we already have a buy position running. It has been a profitable week for us on the GBPUSD. We had a massive, how many pips was that on our first position here? We had about over 200 pips on our first position here. And we had about 100+ pip on our second position here as we rode this bearish move that broke down that bullish trend line to the downside. And one thing about this current structure is that as soon as price got into that 1,800, which we actually identified during the live session yesterday, we saw the multiple rejection of this level, giving us a clue that buyers are gradually coming in this market. And as a result of this, we identified this channel yesterday between the 1.18400 level and the 1.18100 level. And what we said here is that a breakout retest of this, of either of the resistance or the support line, will be welcoming a trading opportunity. And what we saw here, I think after the ADP employment change data came in yesterday, we saw some volatility happen in this market, taking out a lot of people. This market, as you can see here, we had a little shake in this market, and it took about 3 to 4 hours before the market finally came back into normalcy. Now we have a breakout of the 1.18400, which was a beautiful signal that we might be witnessing a reversal pattern here. And in fact, the market gave us multiple entries as we saw the retest of the 1.184 like 3 good times before the bullish momentum began here. And so for those who are taking advantage of this opportunity, well done to you for being on standby to catch that move, as you will currently be running with about 42 pips in profit. Then another resistance point was added to the structure here during the early hours of today for me, so I added another position around the 1.1850 level, and price action has been moving up in that direction. So right now, for those who are already in this trade, well done to you for being on standby to catch that move. Now the next thing we want to be doing right now is to secure this current position. Remember, we are on a counter trend opportunity and anything could actually happen considering the strong bearish momentum that we witnessed a couple of days ago. So in that regard, we want to be moving our stop loss, and an area between the 1.18600 level seems most appropriate to secure this current position. And in addition to this, based on this current market structure here, for those who had missed out on this opportunity, that is the breakout of the 1.18400 level, then what thing we're going to be doing here is to remain patient at this point. We're already far ahead into this retracement phase, and it's going to be very risky joining halfway here. So what I'll be advising us to do here is to remain patient and hold on for price action to come into structure, which is around the 1.19100 level and the 1.19300 area, where I told you yesterday that we want to be looking out for selling opportunity to join that decline to the downside from this current structure. So let's be on standby to catch this opportunity if price action gets into the 1.19 area. For me, my buy position here, I already have my TP target here, hoping that price action will continue to that upside. Move your stop loss accordingly, secure this current position, and let's wait out and see how far this bullish momentum will go. Now, to further identify a structure to use to guide the sell continuation here, we want to take into consideration that bearish impulse leg. So we shall be running our retracement tool through the previous impulse leg here. Then definitely we shall be aiming at an area between the 50 and the 78.6% of the previous impulse leg, which happens to be our golden zone area. And let's quickly identify the structure here. Okay, so we have TP target zone for sellers, TP target zone for sellers, and this area too will also be serving as a potential sell window. All right, so this is what we shall be looking forward to going into the New York session today. So we hope that price action will come into the structure. If it does come into that structure, then we shall be looking out for selling opportunities, like in the form of a reversal pattern appearing around that area on our lower time frame to join that decline to the downside. In fact, I would like to extend this potential window into the 1.19 area. And the reason why I'm extending it into the 1.19 area is simply because of the strong demand zone that we have here prior to the breakdown of that structure. And you all know that from a technical standpoint, whenever we have a breakdown of a structure, we expect that one point in time price is likely going to come back to do a retest of that structure in anticipation of a trend continuation to the downside. So that is why I've extended it into that area. So the most important structure we want to be looking out for as soon as price gets into the 1.191 is to look out for reversal patterns on our lower time frame. It could be a double top structure, a head and shoulder pattern, whichever case it may be. Breakdown retest on our lower time frame, then we can join that decline to the downside. So this is what we are going to be looking out for on the GBPUSD to trade this pair for today. So I hope that we'll be on standby to catch that move. Now, in contrary to what we just explained so far, and like I said, the bullish trend line here will continue to guide this bullish momentum to the upside. Just in case price action does the opposite of what we just said, and instead we cite a breakdown of that bullish trend line. So if a breakdown of the bullish trend line happens, you all know that this is a sign that a momentum shift is gradually coming in. We are not getting too excited to join right away. We wait for further confirmations to happen, like a retest of the trend line or the 1.18500 level. Look out for selling pressure below the structure, after which we can join that decline to the downside. And a further breakdown of the 1.18100 level will definitely welcome additional position on this pair. So that is that on the GBPUSD for today. I hope I made myself clear. You can also munch my screen so that you can use it as a reference point when you're about to make your individual decision. If you have any questions, feel free to drop your inquiries in the comment section below. So with that being said, here I will be moving on to the next pair, and the next pair we shall be looking at this morning is the XAUUSD. And on the XAUUSD, we have been in a buy position since yesterday, and price action continues to trade around our entry zone, giving us a clue that there is a strong indecision in this current market. So how has the week started for us on the XAUUSD? Well, at the beginning of the week, this is what we were able to identify here. We had the channel figured out at the beginning of the week, where we saw price action consolidate between the 1,857 level, which was a resistance point for the week, and we had the 1,850 level, which was a support line for the week. And you know what we look out for whenever we have a flat channel like this. We want to see price action do either a breakout of the channel or a breakdown of the channel for trading opportunities. And the latter is what happened here. We saw price action break down, retest the 1,850 level, and it was at this point that the sell momentum for this week began. Then we added another position at the breakdown of the retest of the 1,840. This was identified on Tuesday. I think on Monday we identified this, and we were looking out for price to continue to the downside here. And on Wednesday we identified the structure here. I think on Tuesday that a breakdown of the 1,845 level will definitely welcome additional position. And in fact, we were able to rather move all the way down, giving us over 4,500 pips in profit on the XAUUSD so far this week. Now, since price action got into that $1,810 level here, what have we seen in this market? You can see that as soon as we got into the 1,810 level, price action had continued to find higher lows. As you can see here, we have higher lows here. Price was unable to break the previous low, giving us a clue that there are possible bullish momentum coming in this market. And yesterday we identified this channel between the 1,815 and the $1,810 level, and we said a breakout of the 1,815 will definitely give us a signal to buy. And since then we have bought the XAUUSD, and price action still remains around that area, though we are currently in profit at this time. And for those who already took advantage of the breakout of the 1,815, I want us to secure this current position by moving our stop loss to our entry point as we anticipate a breakout of the $1,820 level to add more position to our existing trade. Now, if you had missed out on this opportunity here, well, we shall be going into the details of this market structure to decipher if the market will be presenting to us another chance to join this rally to the upside. Before we go into the details of what our expectations are for today, let's quickly run through the daily time frame and have an holistic perspective into what is going on in this market. Now, scaling up into the daily time frame, let's quickly run through what our expectations were at the beginning of this week. Now, at the beginning of the week, we emphasized the fact that price is back into the structure where it started this new year. Remember, price action started the new year right above the 1,800 stroke the 1,820, and since then we saw this bullish momentum that took price all the way to the upside. Then during the first day of the month of February, we saw this crash started throughout the month of February. Price action went through a nosedive as it comes back into the structure where it started the new year. And with the situation of things right now, we are caught within a possible selling opportunity and at the same time buying opportunity around this area. Remember, this area was a strong buy zone at the beginning of the year, and currently we are trading just right around that area. So it's very important that we understand what is really going on here in order to decide if we are going to be buying or selling. But before I go into the details here, I want us to understand the importance of the zone here between the 1,820 and the 1,800. Now, if we go to as far back as June of last year, you will see how sellers took over this market at around the 1,820 and the $1,800 level. You see this area has been a strong supply zone, as every attempt by the buyers to break out of that structure was negated by sellers at every point in time. Now, the same thing has happened here. Price action is back into that structure, which is going to be considered as a bearish territory. Now, we want to see selling pressure around this area to further confirm that sellers are back, leading to the breakdown of the $1,800 level to give us an opportunity to join a decline to the downside. However, if price action climbs up, climbing above the 1,820 by pressure above the structure, this might likely lead to another wave of bullish momentum at this point. So if we scale down to the lower time frame to look at what is really going on here, are we seeing a reversal pattern here, or are we seeing a trend continuation pattern around this area? In order to have a better perspective into that, we want to be scaling back down into our 1 hour time frame to take a technical dissection of the current market structure. Now, if I zoom out a little bit so that we can see things clearly here, and taking into consideration the previous impulse leg in this market, which is bearish, bringing price to the downside, price came back into the 1,820. You saw the second touch, price was unable to break the previous low, and we have a situation where price is approaching back into the 1,820 level. And what do you see here? You see something like a reversal pattern in the form of a double bottom structure. And you all know what we look out for whenever we sight a reversal pattern like this. The next thing we want to be doing is to identify the neckline of the reversal pattern, which shall be the basis for trading opportunities. Now look at what we have here. The neckline of this reversal pattern coincidentally shares a confluence with that $1,820 level, that key level we identified on the daily time frame. Now what this simply means is that for this reversal pattern to mature, we need a breakout of the neckline to happen, retest of structure, as we look forward to buying, adding more position to our existing trade. So for those who had missed out on this opportunity at the breakout of the 1,815 here, I will be advising you to remain patient as we look forward to another breakout of the $1,820 level to happen before joining that rally to the upside. And please note that as soon as price breaks out of the $1,820 level, please note that this is a counter trend opportunity, and what we want to be doing in a counter trend opportunity is to guide our position judiciously by moving our stop loss accordingly as price action moves in our favor. And like I said, since this is a counter trend opportunity, this is going to be a retracement of that previous impulse leg that we had. So it might likely come into that trend line that we identified at the beginning of the week, or it can even go as far as testing the $1,839 level, a level which was broken a couple of days ago. And you all know from a technical standpoint, a breakdown of a structure has a high tendency of price action coming back to retest the structure to incite a trend continuation to the downside. So this counter trend opportunity is likely going to be huge, as we have a potential of about, let's see, between 1,500 pips to about a 2,500 pips profit on this one. So let's be on standby to catch these opportunities as price action is being monitored. So this is my view here on the XAUUSD. So let's be on standby. If you have questions, feel free to drop your inquiries in the comment section. 603, good morning to you. Glad to have you around. So I will be moving on to the last pair for today, which is going to be the USDJPY. And on the USDJPY, remember we sold the USDJPY yesterday. Hold on a second. Let's run through this. Okay, so this is the USDJPY here, and this week started on a bullish note for us on the USDJPY, as we were lucky enough to be part of this buy position after price broke out of the resistance point of that flat channel we identified at the beginning of the week. And then we added another position at the breakout of the 136.200 as price action rode all the way up, giving us about 150, 110 and 60 pips there, about roughly about 400 pips we had on that buy position. Now during the live session yesterday, hold on a second, okay, during the live session yesterday, this is what we saw here that made us to anticipate that bearish momentum. Now we identified this bullish trend line during the live session yesterday, where we said a breakdown of that bullish trend line will be negating a bullish momentum here, and if price action continues to the upside of this trend line, then it will confirm a buy opportunity for us. But this is what happened. We saw the breakdown retest of the 135.700 level on our lower time frame, which also shares a confluence with that bullish trend line to trigger the sell position that we had here. And yesterday we identified the zone around here between the 136.600 level and the 136.00 area, and this was as a result of using our Fibonacci retracement tool. Remember, when we run the Fibonacci retracement tool through the previous impulse leg here, we were able to identify an area between the 50 and the 78.6% as an area where the TP target for our sell position will be. Now, with the situation of things, some of you might have taken your profits already, but price action is still running at this particular point in time. Though we had a maximum TP target at the 136.00 area, so since yesterday, price action has been, let's see how many pips we have already, 140 pips on that first position, and the second position is running with about 80 pips. So we have about 200 plus in profit on the USDJPY. So at this point, I will be advising you, if you are still in the sell position, to extend your TP a little further into this demand zone we identified around the 135.800 level. So extend your TP right now to somewhere around that area, so that we should maximize this profit in this particular market. And why have I said that? If you look at the current structure here, the last 3 hours has given us the candles that appeared on the chart in the last 3 hours is giving us a sign that sellers are still very strong in this market. So what we want to be doing right now is to see how price action will be reacting to the 136.00 level to determine if we are going to be adding more position to our existing trade, or we are going to be getting ready to join a bullish momentum. Now remember the importance of this 136.00 level. Remember, it was the resistance point for us at the beginning of the week, where we bought the USDJPY at the breakout retest of that structure. And right now price is approaching that same level, and you all know from a technical standpoint, whenever we have a breakout of structure, we might likely see price come back to retest that structure to incite another wave of bullish momentum. So that is why I told us that we want to see how price action will be reacting to the structure, and that will be determining if we are going to be buying or selling this pair. So right now, what are we going to be looking forward to from this current structure? To either buy or sell. Now, to buy the USDJPY, we want to see buy pressure resume here, something like a double bottom structure or a inverse head and shoulder pattern supporting that price action wants to continue another wave of bullish momentum. This is the only reason why we are going to be buying the USDJPY here. However, if it happens that price action breaks down the 136.00 level, selling pressure below that structure, it might likely be another opportunity to join a sell momentum to the downside here. So these are the things we are going to be looking at around the 136.00 level. So we are at a critical point in the market. The 136.00 level is a very important level for us and during the New York session today. So whatever happens here will determine if we are going to be buying or selling. So for those who are already in the sell position here, kindly move your stop loss to somewhere right around the 136.400 level to secure this current position as we wait out to see how price action is going to be reacting to the 136.00 area. Now, I would like to share some structures here on the 4 hours time frame so that we can really appreciate the importance of this current market structure, and that will be more revealed on the 4 hours time frame here. And if you remember, if you recall that since our monitoring of this pair throughout the course of last week, we observed how price action was bullish throughout the month of February. And in fact, we have this to further emphasize the strength of the buyers here. We have this ascending channel figured out after connecting the series of higher highs and higher lows in this market. Now, I also emphasize the couple of trend lines I have within that channel, which demarcated the upper part of the channel from the lower part of the channel. And throughout close to the end of last month, we saw our price was trading above the demarcation here. And with the look of things here, with this engulfing bearish candle we saw here in the last 12 hours, there is a likelihood that price action will drop to as far as the support line of this ascending channel in anticipation of another wave of bullish momentum. So we are going to be looking forward to see this. This is the 136.00 level, which I shared earlier. It also shares a confluence with that bullish trend line. So let's see how price action reacts to the structure, and that will determine how far or how determine if we are going to be buying or selling the USDJPY. And remember, we have a strong demand zone here, which is something we also want to take note of as we continue to monitor price action from this current structure. So let's see how price action plays out in the next couple of hours, and that will determine if we are going to be buying or selling this. So for those who are in the sell position, move your stop loss accordingly, secure your current sell position, and let's wait out to see what goes on here. If you have questions, feel free to drop your comments, your inquiries in the comments section, please. Okay, so I think it's on this note I want to be calling it a day, but before I do, let's do a quick recap of what we talked about today, and then we'll call it a day. All right, so do I have any comments? Okay, another profits day. All right, okay, you were busy yesterday. All right, okay, glad to have you around today anyways. Okay, 603, good morning. Susie MB, how are you? Francesco, well done to you. All right, so in the absence of no questions, let's zoom into let's do a quick review of all the pairs we monitored today, then we call it a day here. So the first commodity we looked at today, as usual, is the US oil, and on the US oil we are beginning to see something that looks like a reversal pattern here. And I've told you that since we already have a temporary zone here where buyers have continued to negate all attempt by the sellers to continue to the downside. So we already have a structure at the $76.80 level, that is here, where I told you that we want to be seeing a breakout of that structure, retest of that level on our lower time frame to give us a confirmation to join that rally to the upside. and the further breakout of the $77.20 level will definitely welcome additional position. So is the $77.50 level as well. So we have structures here that has a high tendency of giving us multiple entries for the buy position on the US oil. Now, in as much as we are looking out for buying opportunity here based on the continued buy pressure we have observed around the $76.40 level, I told you that we should not ignore the possibilities that sellers might likely come in. And remember, since the beginning of the week, we have been very bearish. And I told you that to look out for selling opportunities on the US oil, we want to see price action take out all the buy position around the $76.40 level, hereby dropping back within the ambit of the bearish trend line here to incite a selling opportunity to the downside. Then a further breakdown of the $76 level will welcome additional position to this one. But if this does not happen, that is, if price action does not break down, retest the $76.40 level, we continue to hold on to our bullish bias on the US oil. So that is that on the US oil. I wish you best of luck on that one. Then we went on to talk about the US tech here, where we have been witnessing buy pressure around the 12,130. As you can see, we have a buy pressure resume here. So this has lasted about 48 hours now. Price sellers have been finding it very difficult to break down the structure. Now, going into the New York session today, we have identified two structures here to guide our trading activity for today. The first one is the bearish trend line. Remember, since the beginning of the week, we have been selling the US tech, and when we connected the series of lower highs here, we have this bearish trend line figured out. So that is the first structure we are going to be using to guide trading activity for today. Then the second structure is the $12,130 level. Now, how do we want to be using these structures to guide trading activity? So first of all, I will be talking about the sell expectations here. And what we are going to be looking forward to sell is to see price action take out all the buy positions within the 12,130 to give us an opportunity to sell. However, if price action breaks out of the trend line, it will be a signal that the trend line may no longer have that capacity to continue to hold that bearish momentum. And if that happens, we want to be looking out for buy opportunity at a retest of structure, buy pressure above that level to trigger a buy position in this market. Then a further breakout of the $12,200 level will be welcoming additional position to the trade. So at this point in time, let's be on standby. We are waiting for either the breakout or breakdown of the structure, that is the trend line, and the 12,130 for trading opportunities for today. Then we went on to talk about the GBPUSD, where we already have a buy position running here, and I told you that our TP target for this buy opportunity is quite wide. So we have somewhere within the 1.200 level and the 1.19100 area, as we have two positions running at this point. Now, for those who had missed out on this counter trend opportunity, I have told you that we don't have to buy this anymore, as price has really gone far away from a key structure where we could have actually bought the GBPUSD. Now, instead, what we want to be doing now is to remain patient and wait for selling opportunities to continue. Now, remember I told you that we have this bearish impulsive move, which we were lucky enough to be part of a couple of days ago, and coupled with the buy pressure we noticed here, we might likely be seeing this as a retracement of that impulse leg. And with that being said, we have identified a potential sell window within the 1.191 and the 1.201 area, where we said we shall be looking out for selling opportunities. So what we simply want to be looking out for, it could be the 1.191, it could be the 1.19, for anywhere around this area. What we are going to be looking out for is multiple rejection of the zone. That is, price action continue to reject, finding lower highs. Then this will give us a confirmation that selling momentum is gradually coming in. Then we can position ourselves in such a way that we can catch that sell opportunity. However, I also stated here that if price action does not continue to the upside instead, and we saw a sharp breakdown of this bullish trend line here, it will be a sign that a momentum shift is gradually coming in, hereby welcoming a selling opportunity for us on the GBPUSD. So on this one, for those who are already in the buy position, I have told you to move your stop loss, and we have identified an area. In fact, price has moved a little bit further from where we saw it when we were analyzing. So I would suggest an area below the 1.18700 level as an area to place your stop loss at this point. Then we went on to talk about the XAUUSD, where we also have a similar situation with what we have on the GBPUSD, and coincidentally we were able to identify a potential reversal pattern gradually forming at this particular point in market. And if you look at this critically, you can see we have the first touch at the 1810. We have the price coming into the 1820 level, that very important key level we identified on the daily time frame. We saw the second touch, price was unable to break the previous low, and you can see what we have here. Price action appeared to be evolving into a reversal pattern, and this reversal pattern will only be mature when a breakout of the $1,820 level happens. So we already have a buy position above the structure, where we are looking forward to a breakout retest of that level for this counter trend opportunity to the upside. Then the TP target for this counter trend opportunity, I have told you, should be within the bearish trend line here and the 1839 area. As you can see, this structure was broken to the downside yesterday, and you all know we might be seeing a retest of that structure to happen before another wave of bearish momentum will be happening in this market. So we want to be on standby to be part of this opportunity too as well. So let's see how price is going to play out in the next couple of hours as we anticipate the breakout of the 1820. Then please don't forget the importance of this bullish trend line here also, which if a breach of the bullish trend line happens, it's going to be triggering an opportunity to sell the XAUUSD. Yes, so let's be on standby for either of these opportunities to happen. Then we went on to close the day with the USDJPY, and on the USDJPY we have been in a sell position since yesterday. In fact, we have two positions running right now, and currently price action is trading within the potential TP target zone we identified yesterday. And as a result of this, I told you that we should be extending this TP into this demand zone area, as we want to see how price action will be reacting to the 136.00 level, which happens to be here, to decide if we are going to be adding more position to our sell position or getting ready to buy. And I told you that if we are going to be buying the USDJPY, we want to start seeing multiple rejection of the 136.00 level. Probably price action evolves into a reversal pattern, a double bottom structure, breakout retest on our lower time frame, then boom, we are ready to join that rally to the upside. But if a breakdown of the 136.00 level happens, retest of structure, then we shall be getting ready to join that decline to the downside or add more position to our existing trade. So these are my views here on the USDJPY, and I hope I was able to simulate all the possible scenarios, and by now I believe that we are well equipped with all the possibilities that could happen in this market on this instrument that we have been monitoring since the beginning of the week. So thank you for being around, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review and review the pairs we have been monitoring and anticipate the New York session tomorrow. On this note, I wish you best of luck. Do have a wonderful evening, everyone. Bye bye.